Do you expect this to be a multiple bleed off, or are we going to have to start making haircuts to real fundamental numbers?
So I think for now, it's going to be contained to multiples. If we think about the run that we had in markets really over the past couple of months, it's been fueled by a lot of optimism around U.S.-China trade and the Fed and a rebound in global growth. And so, I think it's reasonable to expect things to come out of the multiple first. If we look back to 2003 with SARS, multiples dipped by about 7.5% from peak to trough and then resumed their upward trend as everything got under control. So I think that there was room for markets to pull back before. I think now there's even more room for markets to pull back. But I don't think the initial reaction is necessarily to cut earnings. I think the street is still too optimistic for 2020 as a whole, but I'm not sure that it's going to trickle down all the way quite yet.
Jurrien, I wonder how sentiment plays in to this fact. I mean, the market had been doing quite well. How do you look at the level of, say, euphoria to panic and how that sets us up for the pullback we're seeing today?
Yeah, I mean, in a way that this came at sort of the worst possible moment, at least in terms of the market, because we had this big run up, as David said, into year end and now into the current year. The forward PE on the S&P reached, I think, 18.9 most recently. And, that's pretty lofty. A lot needs to go right for that to be justified. And of course, as we know, in 2019, the market rallied in anticipation of an earnings recovery, and I think that earnings recovery is going to happen. But maybe this outbreak, if it's systemically important, maybe that delays the earnings recovery, and then we have some risk to the multiple, as David said. And at $160 per share of earnings for 2019. A 1 point haircut is a 5% decline in the S&P. A 2 point haircut is a 10% decline. That would be, 2 times 160 is 320. The high recently was 3330 on the S&P. So that brings you back to 3,000, which coincidentally was the breakout area that had contained that 21-month-long stalemate in the market. So to your question about sentiment, obviously things have gotten more ebullient. The fund flow side hasn't been that impressive. It's been positive for the last few months. But clearly people have been optimistic that the earnings recovery that, again, I think is going to happen was so imminent that the market was justified in rallying. And my guess is that the market needs to take a step back now and allow for this 5 to 10% correction to happen if the virus is not contained quickly.